We're in a bull run. I can't sell right now. It's too early.
You're acting so broke right now.
I'm not broke.
You have millionaires and you have nothing to show for it.
I'm not broke. I'm just low on fiat. But when
When's it gonna
Solana
hit the
hits
top?
250, I will sell a little bit and buy your back.
What's it at now?
It's at 187. I will moon pay a little bit of Solana on Rampant when it hits 250, and I will buy you your bag. We're early.
You
We're
don't know
super
that.
early right now.
You don't know that. You keep saying
I've carefully selected a portfolio of meme coins, and I know they're going to go up, and I'm not going to sell my meme coin portfolio to fund my girlfriend's handbag.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks rose on Friday, pushing the S&P 500 to its fifth straight record this week and lifting the Nasdaq to a new all-time high. Earnings and trade optimism boosted investor sentiment, while President Trump eased market nerves by downplaying talks of firing Federal Reserve Chair Jerome Powell. And stocks, another green day. That's all we've said this week. Another record high for the S&P 500, 5 in a row. And again, broad-based market action. We're seeing market breadth improve markedly across the board. I mean, we saw financials outperform, industrials, healthcare, very, very solid. And I mean, outperform against some of the mega caps, which did, cool here today. Meta was down, Amazon was down, Nvidia was down, but we did see outperformance in Microsoft and Google as well. But all in all, a great day, solid day across the board. There were losers, but far and few between. Only two sectors were in the red today. You see the XLE down 0.38%, and then the XLC Communication Services down 0.93%. Every other sector gained, with the S&P 500 up 0.42%. And the leaders actually being like cyclical sectors. Look at XLB Materials, Industrials, Discretionary, Financials, Healthcare. Very, very solid day for these stocks. But we also did see performance here in stuff like technology, staples, utilities. All in all, a fairly solid day. Nothing crazy, just another day coming off what has been a week of pretty solid good news. Growth outperformed today, but every single factor and size segment were in the green. You could see a large cap, mid cap, small cap growth really outperforming. But again, a solid green day. If you were indexed to the market, especially the US market, you did really, really well. But the US was the outlier today, being very, very green. In fact, most of North America was green, but we saw very mixed trade here in Europe. Asia was deep in the red. China, India, even Southeast Asia. Australasia was very red. South Africa was very red. South America was also largely red. So, the US really bucking the trend today. It was actually a fairly red day across the globe. But net, looking at the week, it was a fairly positive week for, just the global markets in general. And today's market momentum and this week's market momentum really stemmed off trade deals. And we got some more news this Friday. Trump and EU leaders are set to meet on Sunday to discuss a Europe-US trade deal. So I think definitely this weekend or sometime early next week, we are going to get an announcement of the EU trade deal. And that is definitely the next catalyst. Market pundits are saying it's going to be a deal similarly structured to what we saw with Japan. However, it's best not to try and predict these scenarios, but rather react to the momentum. We also got some economic data today that surprised to the upside. Durable goods orders ex transports came in better than expected, 0.2 versus 0.1. And you can see durable goods orders month over month fell 9.3%, beating the consensus of 10.8%. So that did help boost markets. The economic data coming in a little bit better than expected, and would also help with risk sentiment as Charles Schwab came out and they made plans to launch Bitcoin and Ether spot trading, aiming to attract clients who want to consolidate crypto holdings with their traditional assets. So look, we're seeing a lot of momentum as it pertains to crypto with this administration, and now even the big trading firms are getting on board. Looking at some market movers, Intel was down 8.6%. They reported earnings, beating on the top line and the bottom line, implementing some cost-cutting measures. They're going to cut 15% of their stock. That's a lot. And while the headline numbers look decent versus expectations, I don't think the numbers really mattered all that much. I think what the market's really looking at is they're focusing on Intel's manufacturing roadmap, and the details were far and few between. The road to recovery is long, and investors essentially just sold first and said, we will investigate later. Charter Communications Group was down 18.2%, really weighing on the communication services sector after it missed earnings on both the top line and the bottom line. The company also said that it had lost 117 residential and small business internet customers in the quarter compared to 100,000 a year ago. not looking good for Charter Communications. And then Deckers Outdoors was up 11% after it beat on the top line and the bottom line and actually raised guidance. So we saw a double beat and a raise. And if you want the full details, I have a video right here of Deckers, and I talk about are they a buyer right now. We also looked at a number of other earnings this week. We tackled Google, D.R. Horton, Netflix, as well as Evolution Gaming. So go ahead on the second channel, FinFluential Media, and go ahead and check those out. And then for everything we saw here today, guys, there was 3,200 advances, 3,000 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, and market momentum continues to remain solid. I mean, everybody's talking about market breadth deteriorating, but our model is not showing that at all. Everything from the 5-day to the 200-day looks really, really solid, including stuff like the 20-day, 50-day, 100-day, 71% of constituents above the 100-day moving average. And this isn't the S&P 500. This is the S&P 1500, guys. This is across the broad market. Very, very solid momentum, if you ask me. Now, guys, looking at the week that just was, we see some very interesting developments. Gold and Bitcoin were actually down about 1.46%. So they actually underperformed the market. This was after a big drop we saw here on Thursday into Friday. TLT was up 0.36%. And then we had small caps, the IWM up 0.41%. The Q is up half a percentage point as well. And then we saw outperformance in the rest of the market. Chinese stocks up 1%, the S&P 500 up 1.2%, European stocks up 1.6%, and the RSP really outperforming up 1.72%, the equal weighted markets. And that's because we've seen market breadth perform really, really well. However, when we look at what we've done year to date, things are shaking up a little bit. We see gold and Bitcoin up 20% year to date, and that is coming off the lows we saw here. We see European stocks and Chinese stocks up 26% as well. And then compared to the Qs, which is up officially double digits, up 11% for the year. The SPY up just shy of 9%. The RSP up 7%. The IWM officially positive, and TLT down 1.3% here for the week. So absolutely crazy to see the developments here. But what we're ultimately seeing is sort of like non-US assets and diversifiers outperforming. European stocks, Chinese stocks, gold and Bitcoin. And then European assets are slowly making a comeback on the way up, and then smaller names really underperforming. Looking at what we actually saw here today, the S&P 500 gained 0.4%, Nasdaq 0.23%. We saw outperformance in the IWM, the RSP, mid caps and small caps. So really a very similar day to what we've seen all week. And that's just that broad market rotation expanding underneath the market. This is very, very healthy. We did see the mega caps leading up into this. And now we're seeing, some of the smaller names catch a bid. And that could be for a number of reasons: trade deals, potential rate cuts, earnings, a whole range of factors. Now you can see internationally it was a bit mixed. European stocks fell, Middle Eastern stocks gained, Chinese stocks fell. Volatility fell as well across the curve. And in the 2-year yield actually rose ever so slightly, but the 10-year and 30-year yield fell. Look at the 30-year yield, though, nearly at the 5% mark. That's a bit concerning. The dollar gained ever so slightly, the second day of gains in the dollar. And I'm still expecting a 100 DXY before the end of the year. TLT was up, and that's because we saw the 10-year and 30-year yield fall. And then you can see Bitcoin and Ethereum. We'll talk about those. Bitcoin and Ethereum are down 0.19 and 0.23%, but there's some very crazy price action we're seeing with these two assets. So here's Bitcoin, and this is the weekly chart of Bitcoin. And you can see structurally, Bitcoin just continues to move higher in a very orderly fashion. You can see that we continue to just move higher, making all-time highs across the way. And you can see we put in highs, higher high, all-time highs in the context of putting in lows, higher lows, and again, that all-time high. And we have massive periods of consolidation at the top end and the bottom end of the range before we make our next move to the upside or the downside. And that's exactly what we're seeing right now. But if we dive into the daily chart, right, and look at what we've seen in the last couple of weeks, ultimately what we've seen is just a little bit consolidation at the top end right here. Bulls coming in a very strong way at these lows. You can tell just by all of the wicks right here. The bulls are stepping in, buying this dip, especially when we get to like this 115, something in the mid-teens, 116, 117. Bulls coming in a very big way. We also are seeing bears step in at the top end. You could see with this massive, massive wick when we made those all-time highs. But very interesting price action. So incredibly interesting price action here from Bitcoin. It's very much similar for Ethereum, right? We could see that the second we get to this like 3,600 level and below, bulls step in a very big way. But the bears are also stepping in at this key level right here. And if we actually just zoom out, right? This is the daily chart. We use this area as resistance multiple times throughout 2024. Here in March, June, and December as well. And what I've said for the better part of the last week right now is Ethereum bulls need to push into this area, consolidate, and then move onward and upward. If they can't do that, we're going back to this 2,500, consolidation digestion zone right here for Ethereum. So that's the play. If we continue to see resistance right here, we're definitely going lower. However, if the bulls can step up and move us higher, we're definitely going higher. And I could see us going ahead, retaking these all-time highs at 4,800. Ultimately, my year-end target for Ethereum is close to the 6,000 mark. I do think the bulls need to step up their game right here, right now. I am long Ethereum. I added some exposure this past week, but we'll see how it all pans out. So I am structurally long Ethereum and Bitcoin. I've been long Bitcoin since about the 70,000 mark. And I was saying to buy that dip because of M2 money supply. And M2 money supply made a new all-time high today. Actually, not quite a new all-time high, but we definitely are seeing consolidation at the top end right here. I really did think M2 money supply was going to continue to move lower. That's not the case. We're seeing a structural bid, and we'll see if this continues. If that is the case, there is more upside for Bitcoin. And guys, ultimately, we're consolidating right here, and the path of least resistance continues to be to the upside for Bitcoin and by extension, Ethereum as well. I think we're going to see all of these assets move to the upside. We're just digesting some of the bigger moves we've made. Now let's actually go ahead and talk about the S&P 500. We finished the week off at the top end of the range right here. We said that the call wall moved up, and that is ultimately the area we were targeting. That's exactly what happened. We're at the 6,400 area. We'll see if this moves up next week. If it does, more upside, especially if we do get a European trade deal. But if it does not, do expect this to act as a little bit of a resistance zone for us to move lower. But ultimately, guys, if we do get a pullback, buy those dips because, structurally, things look very, very sound. I do think we are going to see a little bit of digestion between like mid-August, mid-September, possibly into early October. That digestion is an opportunity to go ahead and buy the dip because I still see 6,600 on the cards for the end of the year and 7,000 sometime in 2026, especially as earnings ramp up. I think that's ultimately what's going to happen in these markets right here. The market is pricing that in. And I do think structurally we are going to go higher in the S&P 500. The Nasdaq's going to lead that charge. I do think we're going higher. I do think we're going to go higher in the Nasdaq 100. You can see we actually broke above the call wall right here. But sitting right on it, we'll see if that moves up. I probably think that will move up sometime next week. Now, the RSP, if I'm not mistaken, the RSP made a new all-time high today. Is that correct? It looks like a closing high, but not a wick high. Let's actually hop on the weekly chart, see if that is the case. So it looks like it was an equal high. Very, very solid stuff. I mean, this could potentially be a situation where, the RSP actually breaks out above here, very similar to what the S&P 500 did. You could see we broke out above the all-time high and then proceeded to go ahead and actually gain, another 4.5%. And because the RSP is significantly cheaper, we could actually see a significant move high, upward of 10% from here as the market transit. We could actually see like the S&P 500 and the Nasdaq showing a bit of digestion, these big names, while the RSP, the IWM, some of these smaller names, continue to rip to the upside. We could actually see that very similarly in the crypto markets, right? We could see Bitcoin have a bit of a digestion period and then Ethereum and its altcoins move higher. We could see that dynamic playing out. But the fact that we're actually at all-time highs here for the RSP is very, very positive, not just for it's actually very positive for the market as a whole. Extremely, extremely bullish stuff, if you ask me. Now, guys, what are some broad market stocks that you could look to get into to generate some alpha? Now, earnings season is coming ahead, so do be aware that a lot of these names, right, could move in very big directions, but I do like Lemonade stock. This is a stock that I actually own. I added to my portfolio, LMND. Earnings is coming up. I think we're going to see a massive guidance raise, and I think we're going to see the $47 mark. I think getting in under 40, great buy. Long-term hold, by the way. Another one is SEMR. I think we're about to see a turnaround play. We saw some very solid price momentum here, pretty much from, the 850 mark all the way to as high as $10 mark. We're just going to digest what has been sort of like, 12% gain in about 10 days. And I do think once we go ahead and break above some of these highs at the $10 and $11 area, I think we're going to go ahead and possibly hit these 52-week highs at the $18 area. Bullish on SEMR. I sold some puts on this name. I own a small equity stake in it. I do think SEMR is going to be a solid name. So if you're looking for broad market plays, I would look at these two. There also are sort of like mid cap and small cap stocks as well. And you could see them outperform, especially if the earnings come in the way they're supposed to. Now, guys, and diving into sentiment, this is 314 Research's sentiment indicator, and S&P 500 sentiment is now touching extreme optimism just because we've had a extreme rally to the upside here in the S&P 500, almost unabated. And it would be logical to see the market cool between, mid-August, sometime between mid-October. And I've been saying that for a while. I'm expecting the market to cool. And if you look right here, whenever the indicator gets above the 60 mark, the max drawdown that you can actually see is about negative 10.5%. So if we do see, anything between a 5 to 10% pullback, I wouldn't be surprised just to reset sentiment, shake out some of the bears, also shake out some of the bulls that would actually be healthy. But this market is telling us it will go higher. Seasonality is telling us that in the very long term, the market will go higher. However, we are a little bit overextended, as you can see right here. So based on sentiment and based on seasonality, if the market is to pull back and mean revert to its trend, we can then go onward and upward and go higher into the end of the year. And ultimately, guys, the reason why we want to be buying the dips is because earnings is coming in really, really good. This is the S&P 500 earnings scorecard, and we've seen the highest positive surprises going back to 2021. This is COVID era surprises when there was a lot of internet money. So we had low expectations coming into earnings season. We're seeing massive beats. That bodes really, really well for the market, and ultimately that will take us higher. The macro also looking really, really good. The steady climb in the S&P 500 global, in the S&P global US composite PMIs, which measures manufacturing activity, alongside positive GDP growth, suggests economic momentum is strengthening. The resilience in output and expansion bodes well for corporate earnings and risk appetite, potentially fueling further gains in equity markets. So if and when we do get that pullback, it's a buy the dip opportunity because things are looking really, really well. Furthermore, when we look at the seasonality of something like initial jobless claims, which is a great parameter for the market, we can actually see a little bit of a move upward here in initial claims, which would coincide with the market wobbling, maybe the 10% pullback, but ultimately path of least resistance into the end of the year is for initial jobless claims to move lower. In other words, for the labor market to continue to remain tight and for one of the best parameters of the economy to remain strong. If that is the case, markets will move higher into the end of the year, but not without some volatility. Now, guys, looking at the high impact data, we kick the week off with jobs openings. We're looking for a 7.3 million number right there. We then get the Q2 GDP growth rate. The market is expecting 2.5%. We then get the Fed interest rate decision, the FOMC, as well as the Fed press conference. We may actually see rate cuts with everything we saw from Donald Trump yesterday. Then on Thursday, we get core PCE, personal income and personal spending. So we get inflation data. And on Friday, we get the big one, non-farm payrolls, the unemployment rate, and the ISM manufacturing PMIs. So a massive week of data. We also have a huge week of earnings and probably the biggest week this earnings season. We kick the week off here on Monday with waste management. That's the biggest name. And then things really get going on Tuesday. Before the open, we have PayPal, Spotify, United Health Group. We also have Procter & Gamble, Boeing, UPS, Merck. Very, very big names here before the open. We're going to cover PayPal on Tuesday, Waste Management on Monday. Then after the close, we have Visa, Starbucks, Bookings Holdings, Mara Holdings, EA Sports, Mondelez, Cheesecake Factory, Teladoc. And then after the close, we are going to cover Visa or Starbucks, depending on what you guys want to see. Leave a comment in the comment section below telling me which one you want to see. There's going to be 2 videos on Tuesday. Then on Wednesday, the big name is going to be ADP. It's really going to move the market. And then after the close, this is where it gets crazy. We have Microsoft and Meta, Robinhood reporting as well. That's a retail favorite. ARM Holdings, Qualcomm, TMDX is reporting as well. Then on Thursday, MasterCard before the open, AbbVie and Ferrari. S&P Global also reporting. Then we also have Amazon, Apple after the close. So another mega cap day here. So Wednesday, Thursday, huge, absolutely huge day. And then on Friday, we have Chevron, Exxon, Moderna, Colgate, Lind. Very big names all this week. Absolutely crazy. Particularly here after the close, we have Visa, Microsoft, Meta, Apple, Amazon. Crazy day. A crazy week next week, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.